Good morning, everyone, and welcome to the Morning Edge. I'm filling in all this week for Blake, who is on vacation throughout the week. If y'all didn't happen to catch it on Friday or earlier last week, he's in Hawaii and will be there throughout the remainder of the week. So I'll be covering here in on the Morning Edge for him over the duration of this week. Obviously, the Brexit still continues to remain the key issue, and is obviously why we're continuing to go on and move lower. Not only in the cable, we're moving lower, not as badly in the euro. S&Ps, I was already expecting a move to test the overnight lows on Thursday into Friday morning, which was 19.99. But I didn't know that it was going to happen necessarily today. I thought I spoke to a reporter on Friday and had mentioned that I thought we'd get down to 19.99 and then ultimately to 19.75 before a bounce within the next week or 2 weeks. I didn't think it was going to happen this quickly that we'd get down here. So, Michael said, just wanted to say great call on the S&P on the 2057 level. Good job. Yeah, thanks a lot. Yeah, it just seemed like we talked about that on Friday, that was the area to go in short. I thought that we'd get a rally into the cash equity open, and then they would try and, push it up a little bit. And I think what happened at that point was, you saw a lot of portfolio managers, I would think, not only other people, use that opportunity to go in and sell S&Ps to hedge, their cash holdings. But like I said, it's been a very wild day. I see here that at this point now, 18 members of the UK's, what is it, shadow government they call it, have already gone and resigned. They're looking asking for Jeremy Corbyn to also resign. It's just a big mess at this point. Obviously, cable has set new lows. Obviously lower than it was on Friday, and another big key thing was that Yellen was supposed to be at this conference called the Centre Conference. I think it was I had read it, I think it was in Portugal. And that she and the ECB, they're saying both bailed out, and obviously they're going to be, looking at everything in the markets. I mean, I wouldn't be buying anything until we get into the cash equity open to see how much damage is done right at the get-go. Kind of like the same thing, but in reverse this time. Whereas I was looking for a rally because we were getting that, the market was coming off the lows and people were thinking, oh, it was overdone, which it really wasn't. That's what I kept saying Friday, it's dark days ahead for the UK. And I stand by that, was that people were thinking, oh, it's overdone. And then David Chalmers made a good point about someone that he had tweeted that said, oh, we'll probably open flat, and we might even rally for the day. Clearly someone that didn't, his point was that, we've got this strong buy the dip mentality. They're thinking that something is just going to bounce back immediately, and you have to factor in not only where the market was, but that everyone was caught, flat-footed on that decision. I remember I kept saying the whole time, it's going to be leave, it's going to be leave, it's going to be leave. And then on the last day, I bit on the polls. I was like, okay, well, I guess the Remain crowd they're going to have at it, So, I was waiting for, good rally to go in and short the euro. And then, everything starts unfolding late Thursday evening or Thursday evening here in the U.S. And pretty apparent, obviously, that it was going to go on and be the leave. And then the wheels truly fell off the caboose, and we got the rally back on Friday. Everybody's thinking it's overdone, it's overdone. You see something huge like that, it is not overdone. That's what I was telling people is, I've seen this movie before. Just like I told that reporter, I go, it's going to be a microcosm of the moves that you saw in 2008, meaning that it's going to be the same type of moves as you see the market sell off, you see some potentially some coordinated action from central banks, and you see it sell back off again. That looks like it's going to be good news again. It rallies back up. So on a much smaller scale, it will be a microcosm of what you saw in 2008. You're going to get these big swings, and it's just going to be, swings to the upside, swings to the downside. until the market can truly balance itself out. And the UK government disintegrating basically is not certainly not helping matters either. And apparently, or actually not apparently, quite obviously, the Leave camp didn't have a plan. I mean, you know, is this a third world banana republic? I mean, I could see that from another country, you know, but I can't believe that they didn't have a plan in place, you know. And I forgot who was making a point of that. Is that Germany had a plan in place just in case, and apparently the Leave folk, obviously, I lay everything at the feet of Boris Johnson, and it's all his fault. So, you know, obviously he was, you know, quite vociferous in his, you know, intention to get the Leave, and I thought the Leave, you know, it could have been done. They could get the Leave done, but they basically, you know, burned everything down where, you know, I think that they would have got the Leave anyway, but they didn't have to basically strip everything to the point that nobody trusts what can happen. And now you're seeing the effects of what can happen when you do something like that, where you feel like, you know, you can say and do anything you want to go on and achieve that success. And I don't think they had to do that. And because of that, I think they could have won, instead of providing those assurances all along the way that they will, you know, that things will still remain intact until eventually they can, you know, work themselves out. I mean, to get, you know, to exit, to provide those reassurances to the market. And he did not think things through. It was more important to just say that they're going to rip everything up. And now you're seeing the effects of what happens when you say things like, I'm going to rip everything up, essentially. And they got the vote, and now the market doesn't trust them, and now that's why everything's gone to hell in a handbasket. You'll hear the old adage, the market doesn't like uncertainty, but what you can do to pacify that, the same way the central banks have been doing, you know, and the BOJ was saying is, you know, we'll do everything that's necessary, we're watching it closely, whatever. That's what you need to go and hear. You know, should have been hearing from Boris Johnson was that or the Leave camp is that, hey, look, you know, we're going to leave. No matter, we're going to leave, but we're going to make sure that everything's done the right way, but we're going to leave. And they said everything, the worst possible things they could say to achieve the victory. They got the victory, but now you see the ramifications of what happens when you just talk off the cuff. And you know who I'm talking about, which is Donald Trump, the type of person that can talk off the cuff. And it's not a political statement. I'm just telling you is that these are the ramifications that you can see when people that potentially could be in power talk off the cuff and will say and do anything to achieve what they want. And now you're seeing it. The market doesn't trust the situation, and they're all bailing out. And as we're talking, cable is on its lows, or maybe a couple of pips off its lows. So that's what you're seeing here. Nick says odds are Corbyn resigns as leader of the UK opposition. Yeah, I've seen a lot of people, even I think it's Jim McGoffrey was saying the same thing. He's toast. He's gone. Visha says UK is in a mess at the moment. Still thinking the pound will be a good long coming up, but not against the dollar. You know, it's now is not the time to be buying. You want to wait, even if from a trading standpoint, wait till we get into the cash equity open, the U.S. cash equity open, to see how many people are forced out of positions. And then if you want to try and step in just to trade, that's it. It's just gonna. I'm just telling you, it's going to be exceptionally volatile. Visha says also think the dollar cash rate will launch this week, lagging at the moment. Nick says it's not Boris Johnson's job to have a Leave plan. He doesn't have the power. He isn't even in government. It's the state of the government's job to negotiate the Leave now. It is their job to negotiate the Leave now, but to put yourself in that situation and not even have any kind of a plan, you're not talking about a guy that just walked off the street, okay? You're talking a guy that was the mayor of not some little hamlet in the UK. He was the mayor of London, so don't tell me that he should have had something. Yes, he should have had something. You know, this guy's actually supposed to be the favored one to be the PM, and this guy doesn't have any kind of plan, doesn't know what to say. No, that's not excusable. And now you're seeing the aftermath of what happens when you have people that are inexperienced, that don't know what to do, what to say. other than just be negative, and now you're seeing the aftermath, and the country's paying for it at this point. So, but let's go on and move into the charts. We'll go and see, because really, like I said, I would not be buying anything. You're better off shorting, but I would not be buying anything until you get into the cash equity open. You're basically going to have to see how the market wants to go on and react at this point. So let's just go on and move into the charts. We're going to move. I mean, obviously, here's the cable. I mean, it's on its, just rock bottom lows. I mean, it's 35-year lows or 32-year lows for the cable. We can look at it against other currencies, but the point is, you don't want to be buying. I mean, at this point, my thinking would be you got to flush out 130 now. That would be my thoughts. That's what I'm saying. So I wouldn't be in any rush to be buying this thing. At all whatsoever, especially when you walk into a Monday, and this is what I was talking about when we came in on Friday. I was saying, you have to be careful because when you're trading, because you don't want to get stuck holding anything over the weekend. And we're seeing how this market, we gapped lower here for the close on Friday, and here we are right on our lows. I'm saying is, my guess is you have to go on in and punch through 130, the big fig, and then see what's below the big fig. Because if you're short from up here, let's say there's no reason for you to cover. If you're short from 139, 138, 137, there's absolutely no reason to cover at this point. You're going to say, you know what, I'm going to hang on. I'll tell you what, I'm short, I'm going to cover at least a quarter at about 129.75. I'm just saying you have to look at it from the other side, how someone who's short, because you're considering, for those who may be considering trying to pick up a bargain, you have to see how they would look at it. So you have to put yourself in the other person's shoes who's short. Maybe they're not short from up here or up here. Say the person's short, let's say they sold Friday's close. And they were so adamant that the UK, the pound would be, or the cable would be under pressure. They sold that. Well, if they sold Friday's close, they're up 400 pips. Okay? There's no reason in hell that they need to go in and cover. They need to go in and let this run and press the bet for what it's worth. So if I'm a buyer, if I'm saying, you know what, I think that the cable's going to go higher, this is crazy, blah, 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 I'm not going to step in here. Why should I put my neck in the chopping block? If it's me, I'm saying, you know what, I'll be a buyer at 29.80, or I'll be a buyer at 29.60, or whatever. There's no reason for me to step in, because you can see here that the pressure continues to remain on the downside. There's no reason whatsoever. And then I've seen other banks, I think HSBC, and I forgot who else, I think it might have been JPM. They've all got targets like 120. And they've got targets like 120 by year end. Now, I'm not saying that they're going to be right, but I'm just saying is that's the, trying to think what the right word would be, but that's the narrative coming into today. And today is only the second day, market-wise or business day-wise, after the referendum. And you want to buy the cable? You mean after 18 members have resigned, the leading proponent of the leave and potentially could be the PM has no plan, and you want to buy? Okay, yeah, no, I would not be advocating that whatsoever. I mean, I would be waiting until we took out 130 in the cable before I'd be even considering buying. Now, you might look a month from now, and cable could be trading at 35.5 or something. Maybe even a week from now, it might bounce up to 35.5. But today, there's no reason to go in and come in, because if you go long cable here, there's a good chance you'll be underwater close to 300 pips when they go in and test 130. And they get beyond 130, and they get to 129. And maybe they get to, my thinking is, if they do that, they can easily get down to like 28.75, 28. Now you're really in a lot of trouble. So that's what I'm saying. You have to look at it from a trading standpoint, in the sense that not because it's so low, it's a great bargain, or not because it's so low, the momentum with it, which the momentum is just that it's so compelling, not only from a charting standpoint. Here's when you, like they say, when you got the best of both worlds, is when you've got the technicals going for you and you've got the fundamentals going for you. So when you put those two together, there's no way in hell you need to be buying the cable. No way in hell. Now, you could have told someone that here and they'd be saying, you're wrong, the cable rallied up. Which you did, it rallied up to 130, but look how quickly it turned around and lost it. It's going to be like this. Like I said, it's almost like a microcosm of, it's almost like a, hang on a moment, it's almost like a microcosm of 2008. And that was my whole point. Hang on a moment. So, like I said, right now we're on our lows. There's no reason for you to go in and come in and move in. I mean, step in when all likelihood they want to just go and push lower. Even if they stabilize here, everybody's waiting for the other shoe to drop. And right now we're less than 200 pips from a big fig, 130. So there's no reason to go on and step in. Yeah, I know that. Nick says it was 18 members of the opposition party that was supporting Remain that have resigned. Yeah, because one of the reasons is they're on Jeremy Corbyn, and I don't pretend to know, UK politics, is because they said that he wasn't forceful enough to have pushed the case for the Remain. I guess what they're trying to say is he should have said, hey, it's going to be really bad, it's going to be really dire, and they just didn't make the case. For them to be for the Remain. No, but I'm talking about Boris Johnson. When I said the person who was the proponent, the strongest proponent of the Leave, that's what I'm saying. I know that these guys were with the opposition, but I'm saying is he didn't. Yeah, Nick says exactly. Yeah, because they didn't make the strong enough case. This is what's going to happen. This is what's going to happen if we do leave. I thought, to a certain extent it was communicated, but I think people just thought, it's just the elites. They're trying to make it so that it can really seem like it's going to be important, but it really isn't. And the way they see it is those guys should have made a more stronger, forceful case to state, hey, this is what's going to happen if you don't. And then if the electorate votes in against it, then okay, so be it, But like I said, I would be exceptionally careful, and I would not be buying. And just like I told you on Monday, is you have to wait for the cash equity open, because when we were rallying in the spoos, I said, hey, they're going to go with that. And I said, let them go on and rally it. And I was surprised how quickly we got up there. Because if you remember, we made it up to I think 40. And then 2040, and then we backed up to 2036. I said, hey, look, they're going to push it. Wait for we get the cash equity open. Resistance is at 2052 to 2057, and we rally up there, and then all of a sudden, everybody gets all hedged up, and then the bottom goes lower. So, but anyway, so. Let's go and move into the euro, because like I said, I'm not trying. When you look at this, you can't go in and say, if you look at a weekly chart, they're supported 30 and a quarter. Look, I've said that before, and there's an old saying: overwhelming, quote unquote, overwhelming fundamentals will always kick technicals in the A every time. Overwhelming fundamentals. So when you said there's a lot of huge support at 40, and let me tell you, 138 is huge. 137, that's about it. That's what I said. Overwhelming fundamentals will always kick technicals in the A. So I trade on technicals, but I'm saying, once again, when you look at overwhelming fundamentals, it doesn't matter what the levels are. It really doesn't. Because everybody's trying to get out of the way. When the person yells fire in the theater, nobody's trying to look and say, what, is it because someone accidentally lit some paper on fire, and it's just a small piece of paper under there. People yell fire, everybody's running for the door. Nobody's saying, man, there's an awesome technical level at 134 and a quarter. It's people want to get the heck out of the way. So what you have to understand is the market's going to push it as far as it can until they, like I said, people have started going and taking some of the shorts off, and they feel that we've pushed it about as far as we can. Then you'll see a bounce back. And the bounce back will probably be pretty severe equally. But like I said, you just don't want to go and step into this thing at this time. Today mainly is going to be on the approach. I mean, we're going to talk about levels, but when you see something like this, when markets, even the euro, break off from their highs, 500 pips, the cable breaks from its highs, 1,800 pips. You know what? You got to start. It's more important to approach. It's more important to go into the review analysis as an approach on how you want to trade, not necessarily saying the levels, because like I said, when you get this big, I'm talking about the fall and the cable, they're going to go for all it's worth, because some of these guys and gals that are short from up here, they got a lot of money in their back pocket, and there's no reason for them to go and cover the shorts. They're going to press the bets for all it's worth. I mean, if you're short and you have 500, 700 pips in your pocket, why the hell are you looking to cover right now? So if that's the case, why the hell are you trying to buy? It doesn't make any sense. So let's go and move into the euro, see if we can get a little bit better semblance of what's going on here. So obviously we talked about this area, the pink area. I thought that was going to be a very good area here to short the euro. Only thing is that when we got the polls, it looked like they were going to go for remains. I said, okay, well, maybe they can blow past this pink area. But I kept saying, I thought this was a great area, the pink area, to go in and show, because we had talked about that before. Not going to go back to that, but the old charts where the market failed there. And I thought that was going to be a good area. But obviously, like I said, when the actual results started coming out, it became pretty obvious that not only was it not going to be remain, but that it was almost going gangbusters for the lead vote. So we had our fall. We actually stopped just a few pips before the 61%. And, I got long 2 or 3 times. I think it was 2, but it might have been 3 times, during the results. I'm saying is different key levels, and, the market was bouncing back. But like I said, right now, the sentiment is overwhelmingly bearish. And that's what I'm saying. You have to be careful when you put on these trades. I don't think you're not going to be worried about the Fed or anybody doing any kind of coordinated action until we get past the equity open. Not saying they're going to do it today, but I'm just saying is they're not stupid either. There's no reason for them to be. The point is that the pressure is going to remain all the way into the cash equity open. Okay, there's no reason for anyone to go and cover. So we may even push back here towards this 984. We'll try and get a better perspective of what things look like. So you can see the significance here when you look at this zone here, which is 741 to 984. The euro obviously is holding up. The euro versus dollar is certainly holding up quite obviously better than the cable. Okay, but on the rally back, you can see here that we ran out of gas right here at the 50%. They tried to make it again back here in the New York session, in the U.S. session, but like I said, it's been hell on wheels, and we're back to testing it. You can see here, and I've had that marked off. Actually, like I said, was a buyer on Thursday night right in this area, and I talked about the bias pivot of 1066. That's why I've got it marked in red. So you can see we got above the bias pivot, but did we close above the bias pivot? No. So once again, the whole idea is with the bias pivot above it, it's bullish. Below it, it's bearish. But you have to wait for the close. So you can see here, right here, well, when they try to go in and rally them back up. And the same thing, they close at the bias pivot right here, and then they quickly start sliding right back below the bias pivot. So we basically reinforce that here with this move right here. We got above 1066. Once the market starts losing it again, we couldn't make it above 1088. we closed below the bias pivot, and not that bad below the bias pivot. Probably closed like about 1051, 1052, and you can see as the market asserts itself to the downside because we're below that bias pivot. And once again, it makes sense. No one's rushing in to go in and buy this market. Not ahead of the cash equity open and in the New York session. And another thing is concerning, for the UK. I mean, obviously the bank shares were down like just a huge amount. I think Barclays was down, 16%. Another bank was down 18%. It's really a crap storm over there. Anna says, can you take a look at the Kiwi? So yeah, we're going to go into the Kiwi. So hang on. Okay, we talked about this area on Friday. Remember, we had even drawn the chart here, and that's 70.95. And remember 71.05? So you can see here the market made a run in that general direction, but we ran out of gas. And until we can get above this 71.05, I remember that. You see, yep. So let me just go and mark that off. One thing you have to be careful with, I would say, you have to be exceptionally careful. All the action is pretty much happening in the cable, obviously, and to a lesser extent, the euro, quite obviously too, because it hurts them too. I think in the overall, actually, there's losers on both sides. I was actually for the leave, for all the financial and regulatory issues. That was why I was. I just think that in order for them to win it, they catered to the bad element, and now that's another thing that has been quite ugly in the aftermath, and certainly doesn't help the situation either. But once again, one thing you have to be concerned with because they will, when these banks step in. I'm talking about the central banks. When they step in, the rally back here is going to be fierce, and you got to be careful. And so you got to look here, 71.57. Let's go and mark that off. You got to be careful. It's one thing with the cable and the euro. It's a whole other thing with the Kiwi, because I tell you what, they will step in, and when they do step in, it's going to be quite a bit of a bounce. So you want to have your levels ahead. So this is going to be 71.58. Mark this out. '71, '74 is a 61%. That's what I'd be looking for to short in that general area. Doesn't mean we can't shoot past it, and we'll just do some quick work on this. I would be playing the percentages, because I know that eventually they'll step in. May not be today, may not be tomorrow, but we'll get a bounce on that. You have to be smart about this because you can get your rear end ripped pretty good. This is the area that you want to look at on the bounce back. I'm just telling you right now, don't get too greedy trying to sell these lows. And let's take a look at what this is. 71.83. Hang on. And it's in 72.09. So you can pick your areas where to go in and short it. I wouldn't be shorted down here. I just wouldn't, because it doesn't mean that we won't have further pressure. But when they do step in and we get a bounce, like let's say the UK stocks bounce, UK bank stocks bounce back, and we and let's say that we go in and get some intervention or coordinated intervention. Or it looks like maybe some of the damage is starting to quell a little bit, you will get a bounce back. And if there is some kind of coordinated action, you will move in past the 61%, and it's in here that you want to go and take your short. Somewhere around this 72-ish area. Because you'll have taken out the 61%, but we will get a bounce back eventually. I just don't see where there's a good risk reward to be shorting it here at this point. Because even on a mild rally, you're going to take out 71.05. Even on a mild rally, you're probably going to, right in here, here's 71.15. So let's go on and right there. So you're going to get at least going to test this area. There's no reason, to me, there's no reason to short at this point, because it's not even reacting that much to the downside. It's holding up overall well. So people could even say, you know what, I think, like, let's say once we get past the cash equity open, and let's say, you know, they sell off a little bit, I'm talking about cable and everything else, but it holds up. So as long as it holds up, people are going to say, you know what, this is a good area to cover. So you're going to go and get a rally back here. So they're going to test this 71.05, this area here. But if we get some kind of coordinated action or something in a way of good news, we're going past the 71.58, because we'll have to go in and test the stops here. We've got here, and it's just a matter of how far they squeeze up. But this is where you want to go and take a short then, because then we'll have to come back and we'll have to retest these lows. Whether we go to lows or not, we'll have to see how everything's evolving at that point. But you'd have to work a little bit lower before you try and stabilize and work higher. So I would not be pushing it at this point. Esther says, I'm thinking about dollar yen to reshort 104. What do you think? Friday's price hit 99 is a bounce from the 38% retracement from the last run on the weekly of October 12 to June 2015. Man, I don't even know why the heck. Well, yeah, I know why the heck I didn't buy it. I wasn't paying attention. Actually, when we had already rallied off of the 99, we were like over 100. That's when I saw it, and I bought the euro. And the euro did bounce, but the euro didn't bounce anywhere close to what the dollar yen did. So let's go and take a look at the dollar yen. I accidentally erased all my stuff here on the dollar yen. But let's take a look. I think we're going to have to actually take a look here on the weekly to see what we're looking at. So hang on a moment. Okay, so we're here on a weekly. This 105.36 is huge. Look at this. It's really basically like 105.13. I remember the 105.13 area on the way up. I remember that. Hang on a moment. Here, there we go. That's 101.23, pretty solid there. Hang on. And we're looking at a weekly chart. And right here, which would be 336. I don't know if it'll make it all the way. Well, if we get this is going to be 336. And this is, move this up a little bit. And this is 513. What we'd be looking for is this move here, the return move. So let's take a look here. $375 would be the 38%. 375. So essentially from 99 to 1144. Although I think the high was like 1146. So 375 would be the 38%. So let's see what's here. That's essentially what you're looking at, 375. And on the upside, That's 358. That's going to be pretty tough. Let's see. That's 430. Personally, I think if you can get 375, that's going to be pretty doggone good. But I mean, if you, like I said, this is going to be 430 here. We'll go on and mark that off real quick. The thing is, you have to realize that it's going to be, you know, the ranges are so big that you're going to have pretty wide stops. But a rally back into this zone here is going to be good, and we'll mark this off too. So there, right? Any kind of rally between 358 and 430, I would recommend taking a short position. And 375 is going to be the 38% of the low of 99 to up here at 11. I think it was 1146. Let's just make sure it's marked off correct. Yep, it was 1146. So any move to up here in this little zone is what I'd be going for. Well, so there it is. That's I think that would be the best area because, like I said, I think that something will happen. And obviously, when these UK bank stocks pop back, it's going to make a huge, huge difference. Huge difference. And be just for a moment. So we're going to move into the dollar CAD and Aussie dollar. If anyone else has any other questions of other markets they want to take a look at, more than happy to look at them. Vaughn said, I can't hear you, but everybody else can hear, so I don't have any problem there. Visha says, can you take a look at the euro pound? Certainly we can take a look at that. Hang on. Wow, this thing is really taking off. Good resistance right up in here. This, you see this real quick? 84.16 looks pretty solid. So let's take this. That looks very nice. 84.16. You see that? true line of demarcation. Hang on. Definitely something I think that you want to keep your eyes on. And we'll also take a look what that where it stands as far as let's throw a couple of fibs on there. Well, we're at the 50%. It's going to be 83.60. Well, actually showing it's 83.68. And the most recent high here, which is 88.12, and we're above the 78%, but not too far above the. We're closing in on the 88%, which. But this is pretty key here, this one right here. But we're going in. This is of the last recent rally, and what the heck? Hold on, something got screwed up. There we go. When I moved it, it messed everything up. Okay, so we got, this is also 84.13 is going to be the 78%, so let's mark this up. So we got coming into a very key area. This euro pound, to me, looks like it provides the best risk to reward. Now we're looking at the euro pound on a weekly chart, but this is huge right here. If you look at this, 83.68 is a 50% of 69.33 all the way back up here at 98.03. That's a 50%. Then 84.13 is a 78% from 69.33 to right up here at 88.16, and then also 84.16 is huge. So really some good stuff right in here. You've got an awesome key area right here, you know, from a risk reward standpoint, just an awesome key area to come in. If I'm long, I'm getting the hell out of Dodge in this area right in here. And once you get past the scariness of the whole Brexit thing, this is not a bad area. Let's see how far they can push them up to get short for a pullback. And here's a more recent high, which is 84.67. We'll mark that off. It's like 84.70, which is 70. This probably provides the best, obviously for rather obvious reasons, the best risk-reward probabilities is here in the euro pound. Just great. I mean, I don't make my font any bigger, Ellen was saying, but that should be a little bit more clear there. You should be able to see that then. I mean, it's already huge to start with. I'll make it temporary, but I don't make my fonts this big. But I can see from a viewing standpoint it might be difficult for you. So look, that's pretty big right there if you want to mark it off real quick on your charts. I don't even trade the euro pound, but I tell you what, that is a great risk reward right in here. I mean, that's just fantastic. Look at that. You've got a confluence of two fibs. The 50% is major. I mean, it's not a major fib, but I'm saying it's major in the sense that it's from 69.33 all the way up to the high of 98.03. So I'm saying the overall zone, or not the zone, but the range is absolutely major. And the market will generally, you'll get a bounce back from a 50%. It's not key like 38 and 68.1, but it's pretty key. It's still one where the market, usually you'll get some pushback, okay? 84.13 being the 78% is very good. Now, if it was just, what I always try and do is I try and go with a confluence. So if it was just one fib, not necessarily a big deal. If it was two fibs, well, that increases it. When I get two fibs within a very tight range against a very key level, you can see the battle of 84.16 even pulls all the way back here. You see, a fallback, a massive rally. We come back here to 84.16, the market bounces, we have a battle. We get above it, we lose it, we get above it, we lose it. Yeah. Once we get back above 84.16, the market launches. We come back, and then for weeks, we get a battle at 84.16. Finally, the bulls win out, and we go off to the races. We run out of gas, and guess what? We have battle again, 84.16. We get above it, but they can't hold it. We lose 84.16, and the wheels come off the caboose. We rally back up, and once we can get past 84.16, it's, blue skies and sailing away. We come back, we battle at 84.16. We bounce off 84.16, we come back, we battle again. We bounce off, we rally up, we come back, we battle again. We bounce up, we battle again. We bounce up, we battle again. We fall, they make one more last hurrah at 84.16, they run out of gas. The reason I keep repeating it, quite obviously, is so that you can, to go and emphasize the significance of 84.16. So when you combine that with a 50% of a major range, 69.32, 69.33 to 98.03, the high, outright high, and then also you have thrown a 78% of the most recent range, then the confluence is absolutely huge. So this is very good right here. Elena was saying she wasn't sure what we were talking about. This is a euro pound. Here it is. You may not be able to see this clearly. The euro versus the pound. Obviously, the two key pairs in this whole, debacle. Because I see the European Union, obviously the pound. But I don't even trade I have traded the euro pound. I just don't trade it because generally you can see here, it just sits here and it moves after a little while. And I'm more apt to day trade or scalp. But I tell you what, this is pretty doggone good right here. The confluence here from a risk reward standpoint. Nilesh asks, what debacle? Okay, well, I guess if you're trying to make a smart remark, because I don't, apparently you don't know what the meaning of debacle is. But anyway, so a pretty good area here on the euro pound, sizing it up. So the next area now we'll go to is the dollar CAD. Now that says, you were saying leave the EU. Yeah, I know, I think they should. It doesn't mean that there's not a big conflict between the UK and the EU. It doesn't matter what side of the argument you're on. And I was on the side of the UK leaving. It doesn't mean that it's a big dust. It's not a big dust up. Obviously, the effects of what have happened in the financial markets augurs that viewpoint. Even though it's for leave, it doesn't mean that it wasn't a big deal. I mean, obviously the markets are telling you it was a big deal. Bob says, I really appreciate your analysis. Yeah, thanks, Bob. Appreciate that. So let's go into the dollar CAD. Obviously, the dollar CAD is being impacted not only because there's a rush into the dollar, and you can see that here. Here's the euro versus the dollar, and well, you can see where it was on Friday, and the wheels fell off the caboose. Obviously, you can see it, just to emphasize, you can see it here in the cable, although I would think that the pound is falling against everything under the sun. You see, you know, the dollar yen is its own thing. I mean, the dollar yen, I mean, both the yen and the dollar are risk-off currencies, and the yen is even more so, okay? But you can see here also against the Aussie dollar. Same thing, people rushing into dollars. So with that being said, obviously, and and most of y'all probably know that, but I mean, some people that may be new, is we have two things pulling on the dollar CAD at the same time, which is obviously there's the undertone bid because people are going into dollars, and then there's a concern for the crude oil, which has been falling. There's two schools of thought on the crude oil, which obviously it's impacting the dollar CAD, which is if there's uncertainty and potentially we could see a global recession on the backdrop of the UK situation, well then that's less demand for crude oil. And on top of that, crude oil has already rallied like, you know, bananas, so we're backing away. Also, because of the strength of the dollar, that's going to weigh on the cost of crude, so it's going to push crude. To be honest with you, I'm surprised crude is actually holding up this well at $47. I do expect it to go to 44.5 and eventually 42.5, but it's actually holding up very well overall. So let's go and take a look at it, and we're looking at it technically. This is one market. You really have to look at it technically. Not that you don't look at everything else, you know, technicals, but I'm saying is, unlike what I was arguing earlier, the euro, and then quite obviously the pound, and to a lesser extent, the dollar yen, in the sense that you kind of have to put technicals to the wayside while you deal with what's happening. The fundamental story is far outweighing what the technicals are. So it's good. I mean, I was doing that during the vote when I was buying the euro at certain levels. But I didn't lose track of this is a huge fundamental story. So you want to use the technicals to gauge your risk or to weigh your risk or factor in your risk. But this is not the time to use your technicals and say, I will buy here no matter what. I will sell here no matter what. Now, it's a little bit more of a play here in the CAD, the dollar CAD, the CAD doesn't have anything to do with necessarily what's going on between the fight between the UK and the euro, but we have that undertone bit of the dollar, but it's also being impacted by the crude, and the crude is being impacted by the UK situation. Okay, but this is one pair where you really want to focus more on the technicals. Now it's already time for a break. Like I said, I'm only taking one break out of every 2 hours. That way we can go through all the analysis without, a break, because there's so much news and the markets are moving so fast. So, one moment. I just need to go in and post a couple of things, and then we'll go on break. And I'm going to go on and post a key story from Reuters. And the break could be about maybe just a hair over 10 minutes, since it's the only break I'll take during the 2 hours. When we come back, we'll wrap up currencies, and then we'll